Hello guys, welcome back to the Lumley trading video. In this one we are going to be doing some in-depth stock analysis or technical analysis over on FUBO, FuboTV, ticker FUBO. So to get straight into it, currently sitting at $1.67. Now this is quite key because don't forget we are now coming into that 52-week low of $1.61. But also at this level there is key things to be watching. 153. First deviation over on the 6 month, and also you compare that with the 150 big or kind of key psychological level. So really coming into that 150 level, this is going to be a key support. It'll be kind of key to be watching how it comes into this level. Right now it looks like it will hit a divergence, which again should just kind of increase the chances of that bounce. Obviously when we come into that first deviation for the first time, we tend to expect a bounce. If it's paired with that divergence, it's going to be, just make the likelihood of it all that much stronger. But it's only a divergence on the 4 hour 6 month, not on the 1 year. So just be noting that. But overall, the divergence shouldn't matter too much. It's just watching how does it react. But we should be looking at a bounce coming into that level. Now, though, if we do break that, and again, we can catch the trend down. If it does break this level, remember, it's just waiting for that breakthrough. Come back to retest it as a resistance. If that level holds, then we would expect to move down to that next deviation, which in this case would take us to 66 cents and 27 cents as that kind of final target. So those were the key supports, but really in general, these kind of stocks I don't like buying to the downside. And the reason for that, yes, they can be looked at, cheap on the 1 year or the 6 months. If they're at the 52-week low, yes, they sometimes squeeze, so you got the chance of that happening, but you're kind of buying on the gamble that it will squeeze. But again, if a company's selling off like this company, near enough $9 down to $1, there is a reason for that, a fundamental weakness for a stock to sell off that much, unless you really understand why it sold off that much, and maybe from then an investment standpoint, it may make more sense. But from a trading perspective, as soon as you see this, you don't even really need to see the fundamentals. There is a reason it's getting sold off. Don't just buy it because it's cheap. Understand why it's cheap if you do want to be buying into it, but really when I see something like this, I much prefer just catching them to the short side. And how would I be looking to do that? So if we can break this 240, that's not a level I'll be looking to trade because that is a statistical mean. And so yeah, this usually is where you expect price to reverse to. So that could be a target if you're looking to trade that 150 bounce. That could be a potential target to be looking at. But really, I'm not looking at this stock short bias until we come into about 325 because this is our first deviation on both the 6 month and the 1 year. And you can see when he hit it the first time, really strong sell-off. We come back to statistical mean. So now I'll be looking like, oh, now I'm happy to retrade that level. So if we come into here again, how do we want to trade it? Firstly, you can check, is there options? There is. So it's a stock I'm a lot more likely to trade because I like options if I'm trading a stock, because then I don't need to time it perfectly. Obviously, if you're shorting outright shares, firstly, there need to be shares available. And even if they're, with a platform where you can locate them, they tend to be expensive. So is it worth it for a day trade or a swing trade? What's your risk to reward and all of that? But one way I like to trade them is through a credit or debit spread strategy, because then you get your defined risk. You usually can get a good one-to-one risk to reward. You can pick the expiry, and as long as at that expiry you're below that entry price, which at 325. Let's say if I bought it or got short there, and I say within 2 weeks or a month, I think it's going to be below 325, one-to-one risk to reward. Probability is that it's going to be below there. So that's instantly a strategy where you can get more than a 50% win rate on a one-to-one. So overall profitable strategy. So that's one thing I look at trading. If we break that though, we'll have that same trade opportunity at 412 going on to 480 to around $5. These levels are close, so I'd be using that more as a range, not individuals. And if we break that, we have final levels taking us all the way out to 585. 635 and 790. So these are the key levels. Again, not something I'm personally even going to touch to the downside. The only way I'm looking to trade this is if it pushes to these upside. And again, I'm only looking to trade them short bias, but overall these levels can just be used in any way you kind of want to if you want to be paying attention to them. These are just high probability levels where you expect to see kind of elevated volatility, and the first time you come into them you expect kind of a pullback. So if you're coming into this level for the first time, you expect a bounce. It may come back to retest it, and if it does, then it's just watching for the break, retest, and then if that level holds, then it's looking for it to the next deviation. So you can either play bounces kind of as a reversal, or you can play the trend. That's why I like using these levels, because they can be used in both ways. or if you just want to do one of them. Anyway, I hope you enjoyed the breakdown on FUBO. If you did, why not drop a like and subscribe? Let me know if you're currently holding this stock, whether that's as a trade or an investment or not at all. And if you did enjoy the video, yeah, drop a like and subscribe, and why don't you check out this analysis video.